Hey everyone, Greg here from Higher Low. I thought that this week the price action was there's enough price action here to warrant a video journal. So I wanted to kind of do one real quick. So earlier last week we saw a gap lower, some sideways chop, and then the rest of the week was more or less choppy, and it was basically setting up for the jobs report. Thursday we got the pullback. We were kind of looking like this could be kind of a head and shoulders top right in here, and it didn't play out. We got the gap higher, and basically what that did is it triggered a larger pattern that we're watching. I think last week we closed out the following week right around here, and I had drawn basically this pattern here. Saying, look, watch for a dip into this 2050 area. We didn't even get down there. They held it up, around 2075, and now we have a larger, big inverse head and shoulders pattern that is now triggered. So what happens from here? Well, a couple things. One is the 2134.71 is the all-time high in the SPX, and we really need to respect that level. Because we are still in a 300-point trading range until that area breaks. So what we could see next week maybe is some consolidation and then a pullback into this neckline, maybe slightly below, and then see what happens. But we really want to see the bulls defend this neckline to keep this pattern in motion. But I'm leaning bullish until this pattern is killed off. You have to lean bullish because the upside target is 22.25. On a measured move basis using this low and this high. Yes, usually we see a neckline retest, but I'm telling you, if we take out this high and this area becomes support, you're going to see some massive FOMO, and it should move very quickly. But until then, like I said, we really, really, really need to respect this range highs. In other words, if you're not already long, you want to just be very careful right into these all-time highs until you can see that it starts to break away from them. Just because you're still in the range, and the bull and bear trap trade has been very big. In other words, what could happen here is we trap lower, and then a bounce, and then we have a head and shoulders, and this thing just totally fails at the all-time highs. I'm not saying that will happen, but that's something we want to watch out for. The risk here is very well defined. It's above this neckline, you can be long. Just calculate your risk based on that. If you get a close back below it, you probably want to at least take some off, and then below this shoulder low, all bets are off. And we go, below this neckline, we go far more neutral. Back below here on a closing basis, we're going to be more bearish. But like I said, I'm not trying to, I'm leaning very bullish here. The pattern is there. The breadth is there. We're seeing great breadth across the board. So lots of stocks are participating. So there's no reason to be super scared here. We just want to respect what can happen until this range is broken. We want to see this. We can get up in here. We want to see some of that. That's basically what we want to see is right there, or something. Even this. That can happen too. But we really respect the neckline. We have a pattern, respect it. And then across the board, like we're saying, is everywhere, right? The Russell triggered it. You can see the pattern here. The Nasdaq, same thing. I don't even have to redraw it. And then the Dow Jones Industrial Average, same thing. So, across the board, we're seeing an inverse head and shoulders that wants to take us above the all-time highs. But until we take out the all-time highs, we're still in the big, larger 300-point trading range that we've been in since basically the end of QE3. That leaves us to, let's just review a few charts that I think are interesting. Sorry, I was not prepared for this part. Okay, so the Latin America ETF is looking awfully interesting. If we take the weekly time frame here, we can see the formation of the inverse head and shoulders here. And so we want to see a breakout and a close above 2040, but that would target 3681, which is 35% higher. So keep an eye on this one. Keep this one on your watch list. Looks pretty strong. If we take the VWAP anchor here, the VWAP from the lows, yeah, it's you can see that it's trading. Well, we'll put it right here. It's trading right. It's closed right on that thing, and so this thing looks like it's ready to take off. So I'd watch these Latin America ETFs. The emerging market ETF. I didn't put this one in the notes. The ILF is, but the this looks very similar. Kind of a left shoulder. We've been talking about this for a while. Inverse head and shoulders there. Excuse me. The issue that I have here with the EEM, just FYI, is, and I think I talked about this a few weeks ago in the show or in the notes. It's just that this major overhead supply here. So we want to see this breakout and get back above this level here to have some confidence. But it would target somewhere up in this 45, 46 area. So definitely keep the emerging markets on your watch list, particularly that ILF, the Latin America ETF, the XLV. This one was in last week's notes. Basically, we had this inverse head and shoulders pattern, and one of the things that I was talking about last week is how I thought that there were several sectors that were leading us out of the February lows that were setting up for their next big move. And this is one of them, right? And this one actually kind of lagged quite a bit, but but we do have a big inverse head and shoulders here that's targeting about 82, which would suggest taking out, if you go to the weekly time frame here, it would suggest taking out these highs. But definitely, inverse head and shoulders pattern broke out, closed above the neckline on a weekly time frame. This one looks, pretty solid, but next checkpoint would be, up in the 77 area. The IAI, which is the defense sector, this one, sorry, not IAI, aerospace defense, ITA, sorry, ITA. This one too, basically has this kind of cup and handle formation right here. So if it could take out this high right here, you have a nice, this thing can go to 150 in a measured move perspective. The next one is the IYZ, which is the telecoms. This one is pure yield chasing, no doubt about that. There's, kind of the Tina effect of yield. There's nowhere else to go except utilities and telecoms if you want yield. There's no, because bonds are basically trading at zero interest rates or negative. So people are having to take more risk. That's what the Fed wants, right? So, but this one has a target of 38.95. As long as this cup and handle stays in motion, which so far it has. The last one, MOO, this agricultural ETF is looking, a little bit interesting. Kind of, it's holding the VWAP off the lows. The volume weighted average price off the lows. So that I use this anchor here. So I basically I like to put things on the highs and the lows, because if you're buying, what's the average price that people have paid since this low, right? So the dip buyers, right? And so as long as they want more, which it seems they do because they're buying into it, that I always like to see that, right? So excuse me, we have a kind of an inverse head and shoulders pattern forming here. But we want to see this, this area taken out. But definitely something to keep on the watch list. Probably the least actionable of the ones that I've showed you so far. But certainly one to keep an eye on. So that's the review. Like I said, if you go back, to the S&P, no reason to be, trying to get cued on the short side here until, you see bearish price action. Right now, it's bullish price action across the board. Yet we're still in the trading range, which must be respected. Nothing's ever a sure bet in trading, but we do have, on the 30-minute time frame, we have a big inverse head and shoulders pattern that is set up to take us to 22.25. And until that neckline is, until we're back below that neckline, you have to lean, on the bullish side. So I hope that that helps. You guys have a good weekend, and I'll see you in the morning pep talk on Monday. Take care.